Hello and good afternoon. Welcome to Crypto Cube Analysis. My name is Crypto Cube. Today, I want us to discuss about how you can identify and draw your zones. Sorry, you already know how to identify, but how to draw your supply and demand zones. So I will be showing you how to draw your zones. There is no particular way to draw zones, as this is it depends on your preference. It depends on what suits you, what you think is okay for you, and what you think the market reacts to. Everybody can draw differently, but the thing in common is the basin area where we all draw our supply and demand zones. Like I said, it depends on you. It's individual oriented. Some people choose to use wicks from top wicks to down wicks as their zone, where some people draw from the open or close to the lows or highs. So I will show you how you can draw different types of zones, both supply and demand. I will also show you the functionality of my supply and demand indicator, which I published on TradingView recently and made available to those interested. It's an invite-only indicator, so whoever needs it should read about the TradingView indicator on TradingView and then follow the instructions to get access to it. So I will show you about that as well, and if possible again, I will also show you another more way to filter your zones to really get a really good zones, as not every zone you draw or you see we hold. Just like I said in the previous video, some zones are created due to profit taking, due to economical events or economical factors, which may wear out, and then the zones won't hold anymore. And likewise, we have lack of liquidity on either side. So I will show you how to draw zones, talk about the indicator, and then show you another filter to really get a good zones. No guarantee that the good zones will work, as sometimes the bad zones will hold and then the good zones will fail. So I will show you these three things, and then the other things will follow in another video. Welcome once again to Crypto Cube Analysis. So let's get it started. So as you already know, zones form due to drop, base, rally, and rally, base, rally. That is for a demand zone, and then rally, base, drop for a supply, and drop, base, drop. Yesterday I said this drop, base drop is probably due to profit taking or redistribution, and this rally, base rally due to profit taking or reaccumulation, whereas the base of the drop leading to a rally is a confirmed accumulation phase or accumulation zone. Why? The base of the supply or of the rally leading to a drop is the distribution phase when talking about Y curve. So we know this. So whenever you open your charts and you want to identify or you want to draw a zone, there are little things to look for. All you are looking for is a point where you see like a valley. You are looking for a drop, and then you are looking for a rally following that for demand zone. So as we can see here, there is a drop here coming all the way from this top, and then there is a rally. Now you just have to identify the base, and where would the base of this valley be, or this drop, base drop, where would the base be? It is obvious that this is the base. So as it is obvious that this is the base, how do we then draw the zones around this base for the demand zone? So this is what I'm going to show you. Like I said, let me maximize this a bit. Some people use the wick, while some people use the open or close. So I personally use the open of the red candle when talking about demand, while some people use the wicks. Now we have this valley, we have this basin area here. How do we draw the zone around this? Most times once you identify your basic candles, some people will tell you to use the last red candle just before the rally. And if you are to identify this rally all the way from these very lows, the rally, there was an initial rally which was this. So this is a move away from the basin area. So where is the last red candle? This particular candle will be the last red candle. That one that is highlighted, that will be there. This one will be the last red candle. So some people will then tell you to draw your zone from the wick of that particular candle to the low of the swing, which is here. Let me enable the magnet feature again. So you want to draw from the wick of this very last red candle, which is here. That, let me give this a, what's it called, a border. Okay, better, so you can easily see. So I'm drawing now from the top wick till the low of the swing, which is this very candle. That is the low. You can also do like this, but then, you know, when you minimize your zone, as in when there is a low here, you know, you are exposing yourself to stop hunting, because most times price may come and trigger these lows. So you want to draw to the lows of the swing. So you can draw your zone like this. Some other people will say draw from the last red candle before the upside movement, but draw from the open of that very last candle, which is here. This is the open. So you draw from the open of the candle till the low of the swing, like this. So this is the way I normally draw my own zones. But then some people will not just use the last red candle before the rally. They will use the entire basin area. That means they will identify the lowest low making candle. And if we look at this basin area, what is the lowest low making candle? Sorry, what is the lowest low making candle? A red candle now. This is the lowest low making candle. This low is lower than any other lows around there. So they will use the wick of that particular candle to the lows, like this. Or some people who use the open, they will use the open of the candle, which is this. This way is also valid. So as you can see, there is no particular way to draw your zones. If you are using the last red candle and you are drawing from the wicks, that means you are entering the market very early. Let me position this at that point. So some people will draw like this. So some people will start their own digital line from here. While some people will also use this, the wick of the last low making candle, to draw their zones. While some people will use the open as well. So all this is just to avoid front running, because most times you may have your order waiting at the open of the last red candle before the upside movement, the breakout candle, right? And then price will just come into any of the top ones and reverse. Okay, we do not get a retest of this one yet. So it all depends on you. There is no valid or invalid way of drawing your zones. It all depends on what works for you. That means you have to study the market, study the price, and see what reacts better for you. All this area are the basin area. So you can choose to draw from anywhere, but then mind you, the lowest low in that region should be where your proximal line is. Or, sorry, where your distal line is. That is your distal line, the bottom line. And as you know, I made an example of a filling station yesterday in yesterday's video. So, as you know, a filling station is not just on the roadside, it has to be on a plot of land, right? And if a filling station is on a plot of land, we have the pumps. The pumps will be situated at different terminals or different points in the filling stations. We have, these are the pumps I'm trying to draw. So we have different pumps, which means different stations where cars may go to and refill their fuel tank, right? So if you have a filling station like this with 3 rows of stations, which we have the first row, the second row, and the third row, a car may drive in and just fill on the front row and then leave the filling station. Same way, a car may come in and it will go to the last row to get filled and then exit the filling station. What am I trying to say with this analogy? Is that price may choose to come back into your zone and just take the tip of the zone and reverse. Likewise, it might take or enter deep into the zone and then reverse. But the moment it crosses under the zone, means it's out of that zone. It means there is a possibility that no funds is left on that area, even though they may buy back from the lows. As it has triggered the demand, it has triggered the stops of those longing. And if a stop is triggered, right, it's a sell order, which means people must buy that sell orders. And then this time, it is the institutions that are buying. So there may be buyback and then they close back above. That doesn't mean that the demand has not been taken out. The demand here has been taken out, but the buyback is creating a new sort of demand. So we want to see if that is a new base or not. But for a demand to break, your bias is going to change. The breaking zone, which means the breaking supply zone, should have more precedence now over the demand. So once price returns back to that supply, you want to short the market or you want to sell. We will talk much about that when we get to the level to level trading. So I am just emphasizing or showing you that price may choose to just take the tip of the zone or may choose to go deep inside of it before coming out. So how you place your orders around these zones will depend on you. Either you want to place in the middle, some people even place here. So it all depends on you. It's individualistic. There is no particular way to place your order or to draw your zones. Now let's look for a supply. We see this rally and we see this drop. That is a rally. There must be a base, right? Base, drop. So we want to identify the base in this move. And that base is where we are going to find where to draw our zones or our supply zone. This last candle is the last high making candle. So that seems to be the basic candle. And likewise, as I said here, some people will use the last green candle before the drop. The same way we use the last red candle before the rally here. So if you are using the last green candle, this will be the last green candle before the drop. If you see this as a drop, this is a 2 high, 2 candle up above. It's making a high above this very high. But some people will see this as a drop. So this will be the last green for their case. As we have a small drop, base, drop here. So this is the last green candle. Then you can draw your zones. Then you can draw your zones like this from the wick of the last green candle, the bottom wick, till the high of the last green candle. And that is the high. You can also choose to use the open of the last green candle, which this will then be your zones. Once you draw it into the future, you can see. So here, probably you come into the market after seeing this long drop, then it comes back here for the retest, and then it gives a little reaction to the downside before breaking it. Whereas if you use the wick, the bottom wick now, in this case for the supply, you will have gotten filled here, but then you have some parabolations and it doesn't give you much reward, unlike when you use the open. So if you consider taking the trade at this open here, let's see the percentage you did. So we have 11%. But if you take the trade from this week, to the very low it made before breaking the zone, we have just roughly around 6%. So you see the difference. So when you take the zone to be very small to the upwards, then it has the possibility of giving you more reward to risk ratio than when it becomes very wide. Also, I also mentioned that some people use the lowest making low candle. Likewise, it is okay also the same for supply zone, where you use the highest making candle. And from this region, where is the highest making candle? This is also the highest making candle. So in this scenario, it is the same as the last green or the highest making green candle, which is this. Then you can choose to use the wick or the open to the swing guy, and this is the highest side among these sides. So that will be your supply zone. But there is another thing. If we look at this region here, if we look at this full area here, there is something that is happening here. We have visually from this low right to this high. We could say this is a drop, right? Not a strong drop, right? But then we could say it's a drop. Likewise, we can say it is a base, because at the end of the day, we have this continued rally. So here we have a rally, base, rally. But like I said in my last video, look at all this price action here. This probably means there is no more leftover funds on this particular zone, right? Because we have a lot of price action, a lot of buy and sell happening here on this particular basin here. We have a lot of sell actions and buy action, which is a lot of balance between supply and demand, which happened for a long time. So when you see an action like this and you think price might come there and find demand, what you do is you want to take a look at the next higher time frame. You can use the 6 hour, 8 hours, 12 hours, or daily, depending on you. Let me mark the area once again. This is the area, the basin area. So you want to look at the daily time frame. We are seeing this on the 4 hour, which means on the 4 hour, I may not be interested to take this trade because of this lot of price action happening. It shows me that a lot of buy orders would have taken place before the rally. So there is no guarantee that there are additional funds left over here to enter the market once price returns to it on this particular time frame. But when we go higher, we are now shifting our bias or our trading time frame from the 4 hour to the daily. When we go higher to the daily time frame, what did we see? We see this candle now, this particular candle here. Let me change this again. This particular green candle making the highest high before the little drop. We see it being the highest high, and then we see this being the lowest low in the region, this next candle. We would expect price will have returned back to the base of this drop base rally, because we have a drop base rally here. You can see we have, this drop, this base, then this rally before this drop and this rally. So if you're looking at it on the daily time frame, you are seeing two different things now. You are seeing a drop, a base here, and a rally. Likewise, if you look at this particular red candle, this is the highest making candle, right? Price couldn't go above it, so you want to take that. If you use the wicks, if you do not use the wicks, then you want to take the body, and then you have the low of that particular candle. Price couldn't go below it neither, then you want to roll it. That means all these price action 1, 2, 3, they are all contained within this last red candle here. For them to be contained within this red candle, it shows that the market is in a sideways market on this particular time frame, even all the way from this particular open to this highs. But some people will not use the highs, some people use the body. So you can choose to draw your zone like this, using this particular close here, open to this particular lows. So this entire area may be your zone. If you go on the 4-hour, you will see that this entire price action here has been used as your demand zone. Now coming back to the 4-hour, you do not like this price action here, but you don't want to filter down to where the origin came. Now I'm shifting into another filter, identifying a strong demand zone. I think I have shown you how to draw a good zone already, either using the open to the lows or the open to the highs, or you use the weak high to the weak lows, either those ways. But then here, as you can see from the last video, if you count the basic candle of this particular base, this is the highest making candle, so we won't count that. We can count this particular lows making candle. It went below this one, so that shows bearish action, bearish market structure. We may not as well count that, as we expect price to continue to the downside. So this particular candle will be our first basic candle, 1, 2, 3, and this last candle is the breakout candle for breaking out above this very high and closing above it. So that zone becomes a good zone on the dailies. But then if you look at it straightly, you want to narrow down to the origin of the move. Now, like I said, some people use the last red candle before the upside movement, or before the rally, or before the breakout candle. And in this case, this will be the last red candle. As you can see, if you use the open of the candle, this retest will not have filled you. But if you use the weak high, you will be filled. But using the weak high to the weak low, this zone becomes very big. It becomes very wide, which means the risk reward may not be decent enough. So you want to go back to that 4-hour time frame. This is multiple time frame analysis, right? And find probably the last red before the breakout. This is the highest, right? Now this is clearly the breakout candle. Where is the last red before the breakout? This is it. Then either you use the wick of that, or you use the open. And as you can see, if you use the open of that particular one, you will be filled. Unlike when you are filling on the very top here, which will not give you quality risk reward. So that is one way. Some people will choose to use this entire region even on the 4-hour. Some people do not care if the price action is a lot or not. In as much as it is clearly a basing area, they draw their zones like this. Then they may want to see reversal signals before they buy, or they take an entry at this point, then take another entry mid-range, then take another entry at the bottom of the zones. So if these 3 zones fill, then their average entry will be somewhere around here, and then they can have good risk reward. So that is it. Now, one thing I want to talk about is the indicator. I want to quickly talk about the indicator before I move to filtering the strong zones. So the indicator, like I said, is available on TradingView. It has a link. This is it. There is a link for it. I did explain, there are some explanations I did on it here, where on the charts where I could showed some zones and how to use the indicators and the instructions to follow. I initially published it, but then TradingView did not allow it. They asked me to publish it, probably because I didn't explain how to use it in details. So I have the link out there in the group, and I will also post it in the description below. So if you're interested in it, you can just go there, read about it, then follow the instruction to get access to it. So the indicators is the one giving the signals of these differently colored candles. As you can see, some candles are differently colored. Like we have this up move here is slightly blue instead of this thick blue we have here. This one is also slightly blue. This one is also slightly blue. So how to use this indicator is simple. Once you see a colored candle like this, or a colored down candle. Okay, we go to the time 4 hour to show you 4 supply zones. Here on this daily, we just have demand, demand, demand. So it is the same as I have shown you. Once you have these differently colored candles, if you use the alert function, like if you go to the indicator here, there is an alert here. You can choose to add alerts. So once per bar close, then you create. Then the alert will fire on close of this second candle, not the breakout candle. Because there are some filters I have placed in place to see that it really qualifies for a zone. Because when you use the bar color function on TradingView, it will color the particular bar before the condition is even met. In as much as it meets the condition before the candle closes, it will color it. So if you're on chart at that particular moment, you may see the candle is being colored, but then the demand is not yet confirmed. So until the close of this very next candle, before I will confirm the demand zones. So once this next candle closes and it remains colored, then you have a demand zone. So as on this, we have demand zones. So it is the same as I have shown you. To draw the demand zones on this is using the base. And as you can see, we have a drop here, we have a base, and we have a rally to the upside. Your demand zones, like I will draw, will be from the open to the lows. So I will have a demand zone at this particular point. You can also choose to use the wicks. There are other things you have to look for. Some zones will come like this. The indicator will alert that you have a zone. But when you look at it, it will not be a coordinated zone. So that is one of the things I will also still talk about in this video and in the next videos on how to filter zones. You have to really know how to trade supply and demand before you can rely on an indicator. You do not want to rely on an indicator blindly. The conditions I said may be met, but when you examine it physically, you may not like it, and so you will not like to take the trade. So here we have a demand zone, and then the base here also we have a demand zone. Let me remove this. So as you can see, we have this demand on top of this demand. This one didn't quite get retested if you use the open. If you use the wick, you won't look at this one can't, but this it does get retested, right? So you have a demand on top of another demand. You can choose to match the two. This may be a secondary demand, this is a primary demand. You can choose to match the two like this. So it will depend on you. Then on the retest of this particular candle, it got retested if you have used the open of the last candle or the base. Always use the open of the last candle before the colored candle, or you can also use the wick like this. It's all dependent on you. So here you have a refill, here you also have another refill, leading to another demand being created right on top of another demand. So you have a new demand at this point. So that is the demand zone. But being that the demand is also created on top of two other demands, you can as well merge it in case you do not want to get stopped out easily. So you can take a trade here, take another trade here, take another trade maybe middle of this, and place your stop just below. So this demand, it did get retested, but if you were to place your order at the open of the last trade candle, you wouldn't be filled. Remember, I use this as an example that some people will choose the full basin as their zone. So as you can see, if you use the wick here, you will be filled on this particular retest, and you'll be in profit. Likewise, if you use the basin of the entire area, or if you narrow down to the 4 hour like this, there is no zone painted by the indicator here. But for this zone to be a daily zone, that means it's a likely point of reversal. So whatever point you narrow down to, either this point or this point or this point, the origin of the big move itself. So you expect reversal from there, because it is not a zone on the 4 hour, but it is a daily zone. And daily zones, higher time frame zones, they have precedence over lower time frame zones. And here is another thing. Here also, we have this rally, then we have this drop down, which is also a drop, right? Then we have this next rally. So, but then if you look at it again, this whole area like this is a basin area. It's another basin area, this low, and from this side, it's another basin area. But then for better reward, you can choose to use the top of this to the lows of the region as your demand zone. But like the indicator has shown, we have this last trade and the indicator has painted this as a breakout candle. So you may want to use the open of that candle to the swing low here as your demand. Some people will prefer to use the wick, so it is only okay and it's just what you think is okay for you. But then we also have this one just right on top of another demand here. So placing stop on this trace will be trickish. So all you can do is scale in entries, ladder your entries, or DCA. Take a trade here, take another trade here, take another one, take another, add your stop just below this low. And when you look at market structure, you want to pay attention to market structure. We have this move all the way from this low to this side, then this low. So what is expected of this market is to make an higher high, right? Because we have an higher low. So, and we are on the build up to that higher high, because what we have is a 1, 2, 3, maybe 4, maybe 5. There may be a big correction and a continuation to the upside, or at all no correction, then continuation to the upside. So we have a bullish market structures, which means this market wants to be looking for longs and not shorts. But that doesn't mean you cannot take short entries. You can take counter trade short entries on lower time frames like the 4 hours. So let me quickly see the indicator supplies that has been shown. Here we have one. And if you look at this, we have this rally, we have a base, then we have a drop. This is a drop, which is a breakout candle or the breakdown candle from the basin area. So the indicator has painted that, and like I said, you want to take the candle before the colored candle as your zone. So if you use the open of that candle to the highs, and I'll get it to the left. Okay, that is the highs. Some people will choose to use the wick like this. Some people will even draw it to use the entire area like this. It is perfectly okay in as much as it is a base. And like I said initially, some people will use the highest making high candle. Where is the highest making high green candle? This is the highest making high green candle. So it is the same as the indicator as also shown. So you have the supply there. If you use the body, the body, yes, the open of the candle to the high, at this particular retest, you wouldn't be filled. If you use the wick at this particular retest, you would be filled and you will cash out this long move. You will be in profit. But then if you use the body, which is the open, on this second retest, you will be filled. And mind you, no, if you like it or not, this is a first test. So this is a second test. And as you can see, this gave a lot of profit compared to the profit this will give. Before then, we have a break of this zone. When we talk about level to level, as this zone is also taken out, there definitely is a demand at this point. A zone that takes out an area, if a zone gets taken out, like we have a supply gets taken out like this, then there is a demand at that particular point strong enough to take it out, especially when the zone has held on multiple accounts like 1, 2, 3, 4 times before getting taken out. That means this supply here is huge, and for this supplier to be taken out by this candle, that means there is a great amount of demand coming into the market, which made this particular red area a very good zone to trade. We will talk about that when we talk about level to level. So as you can see, I have talked about how you can draw your zones. I have also talked about the use of the indicator, and we can see it works. And here, okay, there is another zone here that failed by using the indicator. If you draw like that, personally, I wouldn't take this trade. There is a reason to that, because it seems this is the lowest low making candle, right? And like I said, if we have this drop like this, if we have this drop and a base, then a rally. Mind you, this rally haven't happened by that time when the indicator flashed the demand. So don't look at this particular price action yet. So if we have a drop and a base and a rally, this is supposed to be the base. The one I have rectangle is supposed to be the base. But then I also said sometimes I use the last low making candle as my zone. So where is the last low making candle? This is the last low making candle. That means I could have drawn my zone like this. If there was a rally, a long rally, that means I could have drawn my zone like this. If you use the wick as well, you could have done it like this. Now look at the breakout candle as painted by the indicator. As you can see, this indicator didn't quite close above this last low making candle. The height of the candle didn't even go a bit further away than the height of the last low making candle. So even this breakout candle as painted by the indicator is also a basic candle. It is not a breakout candle. Look at the size of this candle. Look at the size of this. Just look at it. Look at the area. It looks like a base. So once the indicator paints a demand or supply area, you want to look at it to be sure that there is really a strong move away from that region. So this leads me to the filter I was talking about on identifying strong and good zones. Now look at this particular zone here. Compare this particular area. Compare this particular area to this particular area. Sorry, I have a call. Let me quickly pause this. I'm back. Sorry about that. The time is even fast spent, but let me quickly wrap this up. So when you look at this particular area here, and then you look at this particular area here, you can easily spot the difference. This is a strong bullish engulfing candle. This is a weak bullish engulfing candle. You can see, just look at the wicks of this last red. Look at the candle itself. Look at this candle. Look at this candle. And if you draw your zone here, if you draw your zone, let me quickly draw this using this, and it is the last low making candle, right? So if you draw this and extend it, what did you see? As you can see, price came back into it and gave all the support movements. So it got retested, and then you can see there is a lot of risk reward here. You enter at this point, assuming you have your stop at this point, it starts like 6%. If you are able to hold up to this point, you have strong hands, then you have 75% on this particular trade. So is that not good? That is quite good. That is quite good. So you want, when you open a chart, you want to look at one thing. Now I'm talking about identification of strong zones. I'm no longer talking about the indicator. So you do not just want to look for a a drop based rally. You want to look for areas of strong movement. You want to look for the drop based rally, yes, but then you want to ensure that there is a strong move away from that base. Now look at this move here. This move here is a strong bullish engulfing candle, and it gave a serious rally. The close of this candle is very strong. That is a strong move away. Now look at this area again. Is this a strong move away from this area? Yes, it is a strong move away because we had increasing candle sizes. So this also could have been an area here. So if you choose to draw, if you use the last red candle, then you could have drawn the zone like this. When price came there, it gave a reaction 2 times, but it didn't quite give much reaction. And as you can see, my indicator didn't even give any demand zone there. And looking at all this price action at this point, you can see that the price action is a lot. So there are a lot of accumulation that has taken place before the rally. So it doesn't qualify it as a good zone. I explained the accumulation thing in the last video. So here you want to look for strong moveaways. Now this is a retest. We still have strong move away. We have a base here. Then we have, this is not a strong move away. And this is the reason why. If you look at this last low making candle here, forget that it is a retest of a demand. We have this breakout candle. It got painted as a zone, so you could draw a zone. You can see it, right? But then looking at this next red candle here, it showed weakness. And you do not want to see weakness. You want to see strength. Like here, you have this pull off, you have this next candle showing strength. You want to see strength on the part of the bulls. So here you have the breakout, then here you have a red candle. It doesn't show strength. Then you have another breakout here, and this is a rally based rally. Some people will draw zones here, and like I said, rally based rally, sometimes they have profit taking zones, sometimes they work, and as you can see, it got retested here and it worked. And here, even here now, can be a strong base. All these zones here can be a strong base, because this is an area of supply meeting demand. We did not see any big rally or any big drop here. And when price came back into it, it did perform well. But then indicator didn't show me this, and I personally wouldn't take it because of this lot of price action, except I go on an higher time frame like the daily, 12 hour, 8 hours, and if I see it is okay and there is a strong move away, then I will be able to take it. So when you open your chart and you are looking for a valley like this, as in you are looking for a drop base rally, this is a rally, right? Then you want to ensure that you see a strong move away from that base. Where is the base of this valley here? I can say we have, I don't know how to draw this thing in parallel. I think the magnet is really disturbing. We have base from here to here. But is this move away a really strong move away? Even though we have a retest here and it's held. But will you take these zones? Remember, we want to take high probability zones. You can choose to take this trade and it will work fine. You can also take it and it won't work. But personally, I wouldn't take it. I wouldn't take it because I do not see this as a strong move away. In fact, this is a channeled move away. And channeled move away is not something I want to take because I expect a breakdown of this structure. And breakdown of this structure can easily lead to the breakdown of this particular lows. So due to that alone, I will not take that very trade. But at the end of the day, we have a decent move away from this base. So here now you might have a good demand zone. This is the last low making candle. How many bases do we have there? 1, 2, 3. Okay, it's good. But then there is a lot of price action here too. It is not just about the area. I mean, it is not just about the zone being created, but about the price line. Around this price line, we have a lot of buy and sell already. We have a lot of buy and sell already before this move away. So will I be interested in this zone? Maybe, maybe not. I just have to look higher and see what the higher time frame is telling me. So the filter you want to see a strong move away. You have a powerful move here. Then you want to look for a base here. Forget this thing, go higher. If you see a long consolidation like this, go higher to the next time frame. So you want to look for a strong move away. And once you see that, okay, like here now we have a strong drop, weakness here, weakness shown here, then another drop here. So we use this particular place or use this base. Even this area we have 1, 2, 3, 4. Okay, still okay. As a base, it got retested, it did work. So sometimes they will work, sometimes they won't work. And look at what I said when I said we do not want to see weakness on the part of the bulls. We have this demand zone drop as painted here. There was a strong move. It is a rally, base rally, which can be profit taking zone. Then we have this weakness, this red candle. Instead of a next green candle, we have this red candle. Price came into it, gave a little reaction, and what happened? It got broken. After breaking it, it comes back again. And remember what I said earlier, when a zone gets taken out, that means the supply is in control. When the supply gets taken out, a demand is in control. Now, its demand has been taken out, which means a supply is in control. You just have to find the supply. And where will be the supply in this case? It is the highest base. So there you have your supply. How you choose to draw it will depend on you. And then after being retested, we have this for that drop. I will talk more about those level to level and the demand taking out supplies in the next video. So what you want to look for after spotting your rally base drop or drop base rally is a strong move away. A strong move away. A strong move away. Here you have a decent move away. Here, okay, as you can see, there is no zone here on even daily. It is a 4-hour zone. So here now we have a strong move, not minding the weakness here. So there should be a supply at this particular point. There should be a supply at this particular point. I'm sorry about that. The time is far gone. I want to really stop. So there should be a supply at this particular point. Price came here, got pushed down to test of demand, and it's holding. Now, if this supply gets taken out with this move, where do you think there will be a demand? There should be a demand around this area. Not minding all this plenty price action. This is crypto. Sometimes all this plenty price action won't matter, but in forex it does matter. So when you see a lot of price action like this, definitely that's a no zone. But in crypto, it's crazy. You can have a retest and then move back up, like we had on BTC recently. I did show that BTC chart. I made this, what's it called? I made a video on it where I said I expected this demand for taking out this supply, and this supply was taken out after many rejections from it. It was taken out. I said I expect a retest of this demand, and it happened. Now we have broken this even second supply, which has rejected price first time, second time. Now there should be a demand somewhere, and where would your demand be if you are to trade this particular trade? It should be around there, either strong or not. There you should have a demand. It's the last trade taken out an opposing zone. So that is it for that. So what you want is strong move away. And okay, and is this a strong move away? When you talk about this, is this a strong move away? Of course it is a strong move away. So you want to look for a strong move away like this. Now we have this painted candle, then we have another bullish candle, which means this should be a strong zone. So area of strength, area of strong move away, you want to see it really showing strength. Once that is done, then you want to take this on. Let me quickly show you some draft I did some years ago. I will be sharing this on my Twitter. You may want to follow me on Twitter and Instagram. I will post them on Twitter and Instagram. Let me quickly search for it and show you. It is a guide on creation of demand zone that I personally made. So I will share them to help you as guide as well. So this is it. This is it. I made this to help as guide. I use it, but then since I created this, I've even advanced more in supply and demand trading than this. So this is creation of demand zone. So you want to see a strong or fast move away from the base, and here we have a drop. Here we have a drop. As you can see, we have a drop. Then we have this base, and we have a strong rally. See the rally, then see the follow-up candle. That means it's a strong demand zone. Likewise, we have a strong move, we rally, we have a base, and we have a strong move away, which shows a strong demand, a strong supply zone. Also, I said a rally, base, rally. As you can see, we have a rally, then a base, a single candle base, which shows that a lot of money weren't traded, probably due to profit taking or reaccumulation, then a move away. That is another zone, and this is another zone. Then I said this is a channeled move away, where you have your drop, you have your base, and then outside the base you have a channeled move away. Some people will see it as strong, but look at this. Is it not a drop base rally? It is a drop base rally, but then it is a channeled move away. And for it to be a channeled move away, I do not want to take that zone, because I expect this shadow to break down, and sometimes a breakdown will force and then will take out your demand zone. Likewise, this is a rally, this is a base, and this is a channeled move away. That is predictable. That is it's a bull flag. I want to have a bull flag coming from a likely zone. You do not want to take it out, as it can break up to the other side. Likewise, this rally, base, rally. It is a rally, right? But it is not a strong rally. So I wouldn't take that as a zone. Likewise, this. Then, this was what I explained yesterday. Less time spent. I said 2 to 4 basic candles. High chances there are unfilled orders waiting at the source. So we have a drop, we have a base, and we have 1, 2, 3, 4 base, and then we have a breakout candle. So that is a strong zone. You expect a retest and continuation to the upside. Likewise, this you can have up to 4 as well basic candles on a rally base rally. I do take some rally base rally, but not all. Same as this, you have a base, a pulse in the market, small pulse to big move. That shows that demand is still present, so you expect to come and continue to the upside. But then when you have a lot of candles, a lot of cars going to the finish section to take out fuel, the fuel may get finished in no time. So when you have a lot of retests, that is why also they say the first test of a supply or demand zone is the best. Continuous retest means all those others there are being taken out gradually. So on a third or fourth test of that zone, it may break. It is the same thing as the creation. When you have a lot before the down move, then it is not a good zone. So I have that. I also have some other ones. There is more than one. Like I have this. Sorry, I don't know. This thing should be going forward. Okay, I have the answers where I say zone taken out zone. I talked about it just now, where you have a demand zone, a strong demand zone, being taken away by a supply zone. You expect the retest of this supply and a continuation to the downside. Demand fade, making supply very good zone. And here it's a failure, where you have zone taken out zone failure, where you have demand and you have a supply created. You expect the supply to hold, yes, because it is a rally based drop. This is a drop based rally based drop. So that is a supply. This is a demand. But it comes and the demand head. What do you expect here? For this to make an higher low, you want to talk about price and market structure here. This now you have a low here to an high to a higher low. What do you expect once and price is going up from an higher low? What do you think is going to happen? This side is possibly going to be taken out. So you do not want to take this supply zone as it is risky. But if this supply zone had broken this, then this class will be taken out. You want to take this zone and continuation to the downside. This is another one taken out of trend 9. I will talk about this later. If you have watched the very video I made, what was it called again? The invalidation or the confirmation, candle close confirmation, I think that's the topic. That was where I explained about all this. When trend line is broken, a close be above it, or when it has interaction with the trend line. I did talk about this. But later on again, when we go into analysis on supply and demand, I will be able to talk about this. There are many others that I have, but I have a lot here. So we have the answers, we have a lot. So I will release them one by one on my Twitter page. So you may want to follow me on Twitter to get the images, and then you can use them as guide to help you in your supply and demand trading. So a recap of what we've done. To identify your zone, you know zones are rally, drop, base rally, drop, base drop for supply, rally, base rally, then rally, base drop. And once you get any of these, like here, this is a rally, this is a base, this is another rally, but all them together is a rally. This is another drop, which can also become a base, then rally. So as you can see, we can have rally, base rally inside a drop base rally, or yes, and we can also have a rally base rally inside of a drop base rally. This now is a rally base rally, then we have a base drop base rally. Likewise, this is a rally, and this entire zone is a base, and this is a rally. So you see how interesting it can be. You just have to be able to spot this. And when you spot those rally base blah 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 areas, you want to make sure that they have a strong move away. This is a strong move away, even though this became red, but it closed a bit far from the mid-range of the candle. And this is a small drop, which can also be termed as a base. This is a very strong move. We have a strong close, a second strong close. So we have a demand zone, the basing and your demand zone. And there is another thing he wants to look for. He wants to look for a bullish engulf or an inside bar. Matter about the bullish engulf and inside bar will come in the next video. Thank you for watching. Do not forget to subscribe. Do not forget to subscribe, like, comment if you do not understand anything, or join up in the Telegram group for discussions, questions and answers. And also we do share some trades there, so you can join us there if you wish. If you don't wish, no problem, just enjoy the video and learn from it. That's the most important. So you can subscribe to the channel, like and share it. And if you want the images I showed just now, they will be uploaded on my Twitter page and Instagram page. You can give a follow, and then you have a copy of them to yourself. So thank you for watching, and do not mind that this video is very long. Sometimes to explain some things unplanned, it does take time, and what is good also you shouldn't complain for what is good. So if it is good, then don't complain. If it's not good, then complain, no problem. So thank you for being with us.